Hello, and welcome to TribNet 2025. My name is Tami, and I am going to be walking through, for the tribute side of the business, our options and course of action that can be taken in regards to surcharge and tariff. A lot of changes have been happening lately, so getting you prepared for those changes is what this class is meant to do. So prepping for changes, some of the initial questions that as a company you'll need to consider and ask yourself, and a lot of you have already asked these questions calling in, and this class is basically kind of to take all of the ideas and places in which Tribute can help ease some of this pain and putting it out into a document so that you can utilize some of the functionality that Tribute already has. So when asking these initial questions, how will your vendors be implementing tariff charges? The funny part about this question is I don't think any of you truly know how all of your vendors will be handling this. So this question is kind of one of those, will they all follow the same guidelines? Will you need to have flexible options in place? And again, we're going to go over actions that can be taken so that you can use multiple or different ways to take care of tariffs that are being charged to you. Then on the other side, will you implement tariff charges to your customers? And working with our customers, there is a variety of um, actions that have been taken, whether some are, are you going to follow the same guidelines with your customers that your vendors are following? Are you going to be selective? Will there be any customers that don't have a tariff attached to them? All of these things are as the user, you're going to need to go through and determine before getting started on the setup. Now, once you have set things up, there's no need to worry because you can always make changes as you go. But as what we're finding is, we've got vendors that are implementing price changes and then backing them out and then putting them back in. And we've got vendors who are charging as individual line items for each line item or a total at the bottom of the invoice. So you, as the vendor to your customers, also have to think about all of these questions. So again, it's not a cut and paste type thing. No one is doing this the same at this point. I will tell you that we are jumping through hoops for all kinds of situations. So what the class is meant to do is give you the options we have so that you can decide as a company what's going to work best in your situation. So on the agenda, charges received, these would be the items or the things that you are receiving in from your vendors. So when the vendors send you a charge through a PO, through the AP programs, what are you going to do with those charges? Determining if those costs should get landed into the cost of your material. How are you going to expense those charges if they are received? So we'll talk about two main options that you can use for receiving your invoices. And if your vendors are charging you a separate line item, or if they are just giving you a lump sum total, the options 1 and 2 on the AP side will be adding an NTIE tax field. So this is in replacement of your sales tax field. This is then option number 2 is using a line item. So you are basically adding a new item line to your purchase orders and possibly just at the AP transaction. Last on here with the AP processing, some of your vendors are just initiating price increases. So you don't have to have an extra line or an extra field. In that situation, you are receiving new prices and hopefully implementing those or doing price updates on your system so that your prices already include the uptick for the tariff charges. On the PO processing side, we also have, if your vendor increases prices, obviously that increases the average cost of the material that's flowing through onto your shelf. If your vendor is using a unique NTIE tax field, or they are, again, multiple tax lines, those are not attached directly to your item numbers. So in that case, through the PO receipts process, if you do want to pull from the expense account that you've posted the tariff expense into, you can then apply that through QLand to the average cost. So it's a way of adding a percentage as you're receiving material in that will uptick the average cost based on that landed cost. And then you can carry it forward. It'll sit on your shelf at that value, and it will also ship out to your customers through cost of goods sold at the higher average cost, which includes that tariff expense. Also in this session, we're going to talk about the flip side of this. So not only the vendors that are billing you, we're going to talk about the customers then that you are potentially billing tariff charges as well. So the options to bill them on the invoices, we'll talk about through the sales order programs, and the things that you need to determine, like, will there be a commission on the tariff charges? Will that be taxed, or are there any other restrictions that need to be in place? So our options on the sales order side, we do have a program that auto generates a line item through OIP as it accumulates costs. This ISGM program we'll talk about, and it originated as a surcharge, and it does use the surcharge item number, but it is also, those, I don't want to say they're exactly the same because they're not, but those kind of go hand in hand, and you can utilize the functionality for both surcharges and tariffs. So that's why kind of this class encompasses both. The second option, instead of that auto-generated charge, is a line item where you're manually entering a line item, either in quote entry or in the order maintenance area, and you're defining what your charge is going to be manually. Some additional considerations that we'll talk about towards the end of the class are the commission posting. If you are going to incur commission or allow there to be a margin against the commission lines, determining if the surcharge tariff, where it should post in the general ledger, writing off surcharge tariffs. So if your customers decide, or if there's, for some reason, you are not going to be able to remit cash against those charges, how to write them off, and so that they would reverse out put them back into the expense for the tariff, instead of going through your normal means of a regular miscellaneous expense. And then also some ZIFMs for special surcharge and tariff criteria that you can put into place if you're using the ISGM program. All right, so our first area, or first section, is going to be about your vendor surcharges. So the options that you can utilize in Tribute in order to receive the charges from your vendors. This first option is to use the NTIE tax field, which is for your sales tax. It's meant to be for sales tax. A lot of you, because you are tax exempt, you aren't currently using these sales taxes when you are paying your vendors. So this option is only if you do not use the tax fields for taxes in AP. The ZIFM that you would turn on, you can do the M to maintain, F to find, and search for sales tax. You can search for NTIE, but the one that you want to pull up is the allow entry of sales tax. That ZIFM has to be set to yes to allow entry of these charges into that additional field, or there's two that are available. I will note, if you go to this ZIFM thinking you're going to utilize it and it's already turned on to yes, I would make sure before you switch these fields to be meant for tariff that you talk with the AP department and make sure they're definitely not utilizing this field for sales tax in any circumstances. What will happen is you will set that sales tax expense field up to post to the tariff surcharge expense instead of sales tax. So again, you only get one general ledger that this can post to. Both fields will post to the same GL. So within the ZIFM, you can also override the sales tax field name. The first field, in this case, the example, I named it tariff. The second one, I named surcharge. Again, both fields will post to the same expense account when I'm processing an AP invoice. Along with this NTIE tax field, and throughout what I'm going to talk about today, if you need any of your transactions on the AP or the AR side to post into a tariff surcharge expense. So usually on the AP side, we'd be posting to the expense. On the AR side, or when we're creating sales, we would decrease this expense to move it into cost of goods if it is part of a sales order. So this GMM record is just to determine that there's a GL account out there that you want to be posting this tariff/surcharge expense in and out of. So determine what that GL account is going to be, confirm it exists in GMM or add it if it doesn't, and then make sure it's on all of your financials for all of your profit centers that it needs to be in. Again, you can check your financials by running a GXR and then viewing the GL account and seeing if there's any financial reports that it needs to be inserted on. The ZF35 then is what's going to ping that field to post to your existing tariff surcharge expense account. So in ZF35, and it's under option C, where you set up your posting accounts, the setup will be interface code AP for accounts payable, and then the trans type 1 will be tax. So that is, again, we're utilizing this field that's really a sales tax field. We're repurposing it to be a tariff surcharge expense. So entering that trans type 1 tax, you can star just means it's going to go to all of your profit centers, which is usually what you would utilize. But if you're unique and you need different postings by profit center and you have any questions about the ZF35, just contact us. Again, this will control an NTIE and NIE when you use that new tariff field or surcharge. If you use both and define both, they will post to this AP tax ZF35 record. And in this case, I set it up to go to my 4417 tariff surcharge expense account. Also using the NTIE tax field, when you process your NTIE invoice, now you can see I've put in my normal invoice amount, my freight amount is listed, and here I can see the tariff and the surcharge. So I can just take directly from my vendor's invoice, enter into that field, and I don't have to do anything else. So this is the simplest way to post that expense through AP, but it is only, again, I enforce, only available to use if you aren't currently using sales taxes. Now, you could have one be sales tax and tariff and then post them into the same expense account and journal entry them out later if you needed to have both fields. But again, it's really meant to be one or the other, and they both directly post to the same account. In this example, you can see the invoice amount was the $5,553.20. The freight was $100 and the tariff was $55.53. So what we'll post when I update this invoice is I'm going to get my normal $5,397.67 was what had been received into my inventory. So that's going to pull out of pending AP when I post the invoice. My freight expense is going to post for the $100, and then my tariff surcharge expense, because I use this new field, is going to post that $55.53, and then the total goes to accounts payable. Again, this example is only if you're using pending payables. If you are not using pending payables, please call me and we will talk about why it is beneficial to utilize that account. The other option, so that was option number 1 in accounts payable that you can utilize for processing that expense, tariff or surcharge expense. The second option that we're going to talk about is using a line item. So this is through QMPOM, QPOM, or NTIE. You are going to use that same, so I've repurposed that GMM record. You're going to use a tariff surcharge expense account that you will have set up. You want to determine, again, if you're going this route, you still have to look and make sure it's on all of your financials. Then for this option, we'll be defining or utilizing, in this case, if it's new, you want to define a new GLCM class, which is a GL class code that's going to control where these items that you place into a specific product code will post to the general ledger. So the GLCM class code, you can name it whatever you want. I usually name something that is non-shelf inventory. I usually start it with a ZZ so that it sorts at the end of my GL classes. And I can see all of those things that I utilize for intangible type items. So my preference of what I set this up for was ZZTF for my tariff. The recommendation then is that you match this GL class code to the same 4-character product code, and that just makes it easier for you to see that GL class somewhere and know exactly what product code it is attached to. The idea is that that product code, everything in that product code that we assign this GL class will post to the GL accounts that we set up in ZF35. Using this line, again, you need to make sure in ZF35 under the sales tab, and this goes both ways, and I usually just make sure it's turned on. I know the sales side will use it, but post to the GL by GL classes, that should be set to yes. This is under ZF35 option B, the GL interface flags. Under the sales tab, post by GL classes, set that to yes. That flag, along with the GMM and GLCM records, that's shared. So I know we're talking two sides of the table here, paying vendors and charging customers. So what you're doing here is affecting both sides. The ZF35 that you will set up so that GLCM class posts to the proper expense account is in this. You'll go into option C to set up the posting accounts, and you'll use the interface code A/P. Trans type 1 is shelf, trans type 2 is INTG for intangible, and then it's critical that you put in that new GL class that you created in the GLCM. So here's my ZZTF. And then I'm going to associate that GL class code with the GL account number that I have listed in the second square. So I'm putting the 4417 to attach to the ZZTF expense account. Once that part is set up, you also need to go into the product code maintenance area. So that's IPCM. Product code maintenance is done there. You're going to define a unique product code that all of the tariff or surcharge IMM records, you can have as many as you want, honestly, as long as they're intangibles, and you use this product code, they'll all post to that same GL account. So the GL account that we associated with ZZTF, the 4417, that expense account, any items I place into the product code of ZZTF and I set up as an intangible will then book into the expense account that I entered on that ZF35. So again, I match the product code to the GL class for ease across the board when I'm looking at reports or I'm trying to determine where something is posting. If I use the same thing, it's helpful for that. And again, this drives the GL posting. You're going to add it into IPPM. So you need to add the product code into IPPM as well. So IPPM is your profit center product code records. So this is the main just product code record, but then each profit center that's going to use any of these items also needs that IPPM set up. The IMM records then, and as I mentioned before, you can set up if there's multiple surcharge items that you need to record and audit. And if, let's say there's a tariff 5% charge, or there's, you can set up as many items as you want. The main thing is that you want it to be in that correct product code, so the ZZTF, and you also need it to be an I attribute. We'll talk a little bit about on the customer side, there is the use of an R or restocking type attribute for a very specific purpose. But normally for any of these line items, you're going to be adding to your POs or to your sales orders as manual line items. You'll want those to be intangibles. Intangibles don't post to stock. You don't have to carry a balance. You also don't want to put a price and cost in any of their records. You're adding them to IDM for the profit centers that will utilize the items, but leaving all in both IMM and IDM, leaving the price and cost fields at 0, because those amounts fluctuate. Your tariff in one order might not be the same tariff in another. And so you don't want something defaulting. You just want to have to enter those prices and costs if needed into those fields. When you add the line, so you can add this line through QMPOM. So if you know in advance that you're going to have a tariff charge, you can add the line item so it's out there and ready. You can also add it through QPOM if that's the point where you know. So it's add it during QMPOM, add it during QPOM, or you can also add it during NTIE. So it doesn't have to be on any of the documents. You can add it as needed. It's critical though that even if you add it at the PO level, you don't have to put, in this case, a price in yet until you get to the invoice level. But some users get confused because they can't get it to add the intangible at the QMPOM level. What you need to do is make sure that at your item number, you're going to tab at a blank item number so that it back kind of shifts you into the line number and into that line type. The line type has to be changed to intangible in order for you to add the new item because it is an intangible attribute. Also noted, intangibles do not get received through QPOR, so you do not need to go into QPOR to quote unquote receive them. When you pull them up in NTIE, the normal pop-up that you'll get says, and it's okay to click yes or okay to this, is that purchase order contains an intangible, so you have to go into the detail entry screen. You have to tell it what the information is for that intangible since there was nothing received into your warehouse. So those places where you can hit your tolerance and not have to go into any of the line detail, this is one of those instances where you need to go into the detail. You need to process what needs to be done against the intangible, and then you can auto post the rest. So that's what this screen is kind of telling you. So it's when you are processing the NTIE, it will tell you when you grab the line that line is not on the receipt, which we know that you didn't receive this physically. It's just a line that we're adding in for costing. So you can click yes to this in NTIE as these lines are not received. And then you're going to want to make sure you put in the invoiced amount that you're receiving from your vendor. You'll put in the unit price in both the invoiced and accepted. So for all intangible lines that are on your POs, you'll need to do both the invoiced and accepted. And then if you do those first and you've got a long list of other items on your purchase order, go ahead and auto post the rest of the receipt if it's within tolerance. And so then you don't have to go into any of the other lines. And now in this case, you have that extra $200 charge as a line item. You're going to be able to track that line item to see an IKQ, the flow of where it's been charged against. And then you also, again, can post that directly into that expense account that you've attached the intangible class to, GL class to. If you are auto adding it, so that's how you would process if the line had been on the PO and then you're pulling it into NTIE. If it was not on your PO yet, so if you are in a situation where it was not a line number that you could add, that's when, if you need to add it to your invoice, you can go ahead and block the add button, use the add button during NTIE. And that point, you can add a new line and it will add as an adjustment, and you can put the quantity and what you're accepted to pay here using that same intangible. And the bottom part, the normal GL posting, this is just an example of the posting for a tariff surcharge using the line item option. It's still posting whatever you received into your pending, any freight expense that you had, and then whatever you've put on the line item should go into your tariff surcharge expense account. And the offset of that then is your accounts payable. Okay, so those are the two options for what you can kind of do for your vendor charges. This third example is for your vendors that are initiating price increases versus charging you separately on their orders. For those vendors, when they provide you with a new price list, you can format that spreadsheet, save the file and FTP it into Tribute. So if they've given you Excel, save it as a .prn, pull it in through FTP. I am noting again, for assistance, this is just a very brief touch on the programs you're using. We have a whole hour-long class about how you can do price updates. So just contact us if you have any questions about doing this, but you can easily take the file that they've sent you, convert the file into a tribute file, enter the update parameters you want to use, create the price change file, report it out, and then update it. So utilizing this set of programs, you can pull those price increases that they've sent to you. You can also bump by a certain percentage. If they don't send you a file and they just say everything's bumped by 5%, and in that case, you can utilize the programs to just uptick what your current prices are based on the percentage that they've given you. Now, this option on the vendor side, for the two options that we had of putting the expense into the previously defined sales tax field or adding a line item to your purchase orders, those do not affect the average cost of the pieces that are sitting on your shelf or shipping to your customers in any way. You know, those are strictly just going right into that expense account and sitting there. Now, the price increases obviously affect your average cost. So that's not a situation where you would need to utilize this if you wanted. But what this QLand option does is for those charges that you've received, and I've seen some of these charges, some of these tariffs are pretty hefty and they're really changing. You know, if you set something, let's say you have a 25%, if you're setting something on the shelf of $50 and with the tariff, it's now $75, that's quite a difference. So including these surcharges in the average cost can be done through QLand. QLand, again, just noting here in what's written, if I add a line in QMPOM, QPOM, or NTIE, it does not change the inventory average cost. If I'm using that sales tax field, it also does not change the inventory cost. So using QLand establishes an increased average cost based on a percentage that you define. So you're defining an estimate of what the received cost will be for that QLand. Estimates can be defined through any combination of the following. So it could be by your vendor and alternate, by your product code, by a specific item or profit center, or any combination of those things. So you can set up these percentages, and I will reiterate that this is a default that will come in. You also have access to maintain it at the time of receiving if the cost is higher or lower than what was expected. But including the surcharge. So in QLand, this is an example. You want to determine which QLand option and percentage field you're going to use. The example that I used was option M. So I went for this vendor, and this product code from this vendor has this, you have three fields you can use: brokerage, duty, or freight. So use whatever one you're not already using for something else, and know that you're using it in this case for your tariff or your surcharge. In this case, I'm using the duty percentage field, and I'm going to base it on this vendor and product code association. And so anything with that vendor and product code, I am setting a 3.5 surcharge tariff against. So when my item is received, let's say it costs $10, the system is going to automatically bump the average cost to $10.35. It's going to decrease the expense of 35 cents from whatever I tell it, which I'm going to tell it to decrease that surcharge tariff expense account that I posted the original charge into. And I'm going to let it carry to the shelf with my inventory piece so that when I ship it to my customer, the actual expense is going to be part of cost of goods sold. So when I do this in ZF35, and we talk about this because we're setting up all of these unique postings to happen or to revolve around that tariff surcharge, under option C for the setup of these posting accounts, you want to add the following record. I used in my example duty. You could use brokerage, which would be our, excuse me, BROK or FRT for freight. I'm going to post the duty that I'm using in QLand, all of it I want to post into this tariff surcharge expense account. So my interface code is A/P, trans type 1 is SHLF for my shelf inventory. Trans type 2 is penned because this is offsetting with my pending account. And then duty is where I want this expense to post to. And actually, the account that I selected was the 4417. So the tariff surcharge expense is where all duty QLand records will post. If I have decided that I am going to use QLand for anything, so it already may be turned on if you're using it for something else. If I activate or I know I want to use it, I need to activate the ZIFM for sure, the one for QPOR. That's the landed cost that controls my shelf inventory. So anything I'm receiving into the shelf that meets my QLand criteria will start getting the bump for the average cost. If I also, there is another ZIFM out there for landed costs through NTIE. What this ZIFM does is it will bump based on my QLand records any drop ship inventory that also falls into the same criteria. So you can have both turned on so that both shelf inventory and drop ships are QLanded. Or you can just turn on your received shelf inventory, which is the normal setting, and then your drop ships will not get charged that. Now, with this case of surcharges and tariffs, you are probably still receiving those charges if something is drop shipped. So in those cases, you are probably going to want to turn the SIFM on. So you're also charging your customers then, receiving and putting that cost into the average cost of the pieces. What QPOR does then is when I'm receiving the product through QPOR, those landed costs are displayed on the bottom. So I can see, in this case, I didn't have any brokerage or freight, but I did have that 3.5 duty percent. And I can maintain them. So it's also showing me, I told you the example of this, I have 10 pieces. So this shelf inventory is $10 each, 10 pieces. I can see the lay down factor is a 1.35. So the average cost per piece started at 10 will be 10.35 because of the 3.5% duty. The example then shows my shelf inventory for these 10 pieces will get hit for 103.50. So now the value of what's sitting on my shelf, the average cost of those pieces is increased from what I actually paid for the product of $100, and it's increased by the 350 that we're pulling. Again, we're pulling it out of the tariff expense area and we're posting it into the cost of the material so that it's part of cost of goods sold when I ship it to the customer. Okay, That is the end of the information talking about the vendor side. Now we're going to switch to charging the customer. And we hit on this already, talked about that there are several options that you're going to have on this side as well. So just kind of a recap of the options that we'll dig into, the ISGM and the manual, and then some of the additional considerations that we're going to take when we are looking at the sales order side. So some questions that come to mind and things to consider, will you bill the customer on a separate line? Are you going to increase your pricing? So are you going to go into IPDM and do increased pricing instead of doing a separate line? And again, you're putting your vendor hat on, so your vendors are also having all these questions. Now it's your turn to have the question of how you're going to pass on these charges. Should that separate line, if you have one, affect commission? How should it post to the GL? Are you going to associate costs with it? Do you want it to affect cost of goods sold? Should it post to your regular sales revenue? All of these things are just kind of things to keep in mind. Will a separate line carry a price and cost, so that again, if it doesn't have a cost, it's going to affect your sales margins at 100% for that line? How will the orders with multiple shipments be handled as well? Will you be doing the separate surcharge on each individual shipment? Will you be doing one bulk charge, or how will that process moving forward? So our option number one, and this option is a clean way of letting the system calculate what the charge is and letting it auto post the charge to your customers. One thing I don't think that is mentioned in this class, but I will also note, is utilizing comments depending on at what point you are putting the inventory, this charge. Some of you might be putting it at the quote level, some might putting it at the sales order level, and some aren't adding it until you are updating your invoice. So having an auto comment populate that says that some of your items might have tariff charges would probably be a good thing to kind of ping your customers so they're aware. So if you need help with comments, there's a whole comment class at TribNet 2025 this year, and we can talk about, implementing some of those auto-populated comments. Okay, circling back to ISGM, this option is going to auto add line 9999 to your invoices for the surcharge, tariff charge, whatever we're going to call it. The item number has to be surcharge. So this functionality was created for surcharge, but what I tell my customers is make the description whatever you need. So in that case, set the description of the line item to be tariff. This ZIFM has to be activated in order for you even to attempt this or utilize this functionality. So some hot tips that we have with this ZIFM: be sure that your surcharges have been set up, and we're going to walk through this: ISGM, IMM, IPCM, and CM, flagging your customers that should be charged before turning this on. Or if you're going to be turning it on slowly, at least have one of the records out there, and then implement the rest after you've tested and confirmed that it is the route that you want to go. And then also noted is that on your OICE correction, surcharges will only be generated if the line is manually added. So we're not going to auto-populate any kind of surcharge through OICE. It's just the OIP process that's doing this. And in this case, you can look this up through the add surcharge line record in ZIFM. The item then in ISGM, you can set up as many ISGM codes that you need. So in this example, this is for a 5% tariff, and I've set up a surcharge TRF 05 to, kind of relay to me that that's what it is. It is a 5% tariff. This again is going to auto add as line 999 based on the criteria that I give it. So I am going to enter this surcharge. This is all that I'm entering too. This is the only field that I have to go into in ISGM. I'm going to make a description. I'm going to select the percentage that I want to be applied. And then I'm going to pick the selling percent where I'm applying it to. So that apply selling percentage can either be the list price of your item, the price of your item, or so net price, or the standard replacement cost. So three options for where you're going to base that 5% on. Right now, I also note that that cost percent is currently not used by the system. This, so the ISGM record gets set up. It's not doing anything until we tell what items to use that ISGM record. But once it's set up in IMM under the tab number 2, under the additional info tab, there is a surcharge code field. And once you fill that in for an item, it will, anytime that item is on anyone's order, and I'll also tell you it's only customers that are flagged to accept the surcharges. So it's not everyone. There's two folds. The item has to have a surcharge code, and your customer has to be flagged to receive surcharges. So this line 9999 will automatically get added to your order for, in this case, the 5% of the price that I put on that customer's order, as long as that customer is tagged to receive surcharges. So it's, again, at the IMM level. Now, that might make you think, well, I'm not going to go through all of my items and set up a surcharge code. That would be way too hard. So what you can do in that event is use the IMF set program. Option 31 allows you to globally change the IMF surcharge code. You can change it change it from blank to whatever item code you want, or if you had it set at tier 7 and now it's tier 5, you can change from one surcharge code to another, and then you have the ability to select by product code. So if you want the whole, in this case, I wanted the whole product code dry H. I wanted that to be all this TAR05. And once I hit enter on that field option 31, I'll get a listing of what was changed, and it will change those for me automatically. If it's not as simple as a whole product code is going to get the same surcharge code, you can utilize the imports field option. So instead of, again, going into all of those IMM records manually, the import fields would allow you to, from an Excel spreadsheet, select what items should have the charges and import that information in. Use that that surcharge code, bring that into the IMM record. Also, for if you do have a full product code that has the same surcharge code, if it does, you can utilize IPCM under the item defaults tab, so that any new records that you set up will be impacted. So again, this isn't a fallback for all of the items in the product code. It's a default for any new items getting added to the system. If you throw it in IPCM, if you add a new item to dry H at this point, it would automatically have the surcharge code TRF05 in its IMM record out of the gate. For this to work, for this auto add line of the 999, you have to have, or you have to add into your IMM and IDM for all of your profit centers that will be using this item, the item called surcharge. So it has to be surcharge because that's hard coded into the functionality of this ISGM program. It must also be an R type attribute flag. So that's the difference between those manual lines that you can add through AP and AR, or through POs, or through your sales orders. This, in order for this program to auto add this item, it needs to be set up as an R attribute. Again, hard coded, auto adds, and it's coming from the ISGM record. When you are also setting these up, I mentioned, the item has to have the surcharge code and your customer has to be flagged to apply surcharges. So you could have three customers from your whole database and only those three are getting charged. And it's based on under their flags tab in CM. So under the customer master, the flags tab, there is an apply surcharge checkbox. If that is flagged, in IMM that it has a surcharge and the customer has flagged in CM that they should be receiving a surcharge, that's when that order is going to start accumulating all of the costs associated with what you just shipped. And as you ship it at the end, you'll get this 999 line that includes all of those costs. The global setting then for this, so you can make a change in your customer master. The global setting for this is CMF set. So instead of going into, if it is going to be across the board for all your customers, don't think that you have to go into all of the customer masters and flip that switch. Globally set them through CMF set option 31 for the surcharge flag. Same criteria that you would have for the vendor side, kind of, which customers do you want to switch that surcharge flag for? And then you can also import. So if not all customers should be set with the flag, you can import who needs to have that setting. This is an example of the invoice. So my invoice passed through and you can see the line 9999 listed at the bottom, my surcharge line. I have a shipped quantity. So there wasn't an order quantity, there wasn't a release quantity. This line was not on my quote, it was not on my order, but because I met the criteria of the customer was flagged to be surcharged and the item, both of these items were actually set to have a surcharge. I accumulated those charges and charged the 46.25 while OIP, auto charged. I didn't have to do anything myself. So again, line 999 auto populated with the 4625. On my line 10, I had a 10% ISGM code. So 2750 was for line 10. Line 20 had a 5% ISGM code. So that was 1875. And that's how it accumulated to that total charged of 4625. Again, I didn't have to do anything on the order or on the quote. I just set up the ISGM and flagged the items and the customers that should receive those charges. The second option for what I can do on the sales order side is generally like the one I'm doing on the PO side where I'm adding a manual line. This is kind of reflective of that same thing, the GMM, that tariff surcharge expense. If I want any of this to ping into that tariff surcharge expense, if I want to drop that expense when I'm charging the customer, we can do some unique things with the ZF35. So again, just make sure the account number is out there. Define the GL class, and if it's already been defined on the AP side, it's still here and we can still use it on the sales order side. So we would match the GL to the product code for ease of use, just like we did on AP. Same screen as well with the GL class codes. You're going to want to make sure that under tab number 3 in ZF35, you have your system to allow you to use those unique GL classes. And note that this flag, again, GMM and GLCM, we're using them to both pay vendors and charge customers. So they're utilized both sides. This, however, is what you will need to set up in ZF35 option C for the posting accounts in how you want things to post. So my orange side here are the prices and where I want the sales to post, the price that I'm putting on these intangible lines, and then the purple are the costs. So if I want to decrease the cost of my expense that happened on the AP side, and I want to post it into cost of goods sold, and I'm using a unique or manually entered line item, I need to set up these additional ZF35 records, and they're for cash type orders, drop ship orders, and shelf orders. If I set these up, then I can, again, the cost will decrease, the expense on the AP side and move it into cost of goods sold, and the price will post it into, if I want a unique, you don't have to put it into a unique sales code revenue account, but if you wanted to, you could. So the purple or you don't necessarily have to set these up in order to use these. If you just want to put a price and you just want it to impact your regular sales account and the accounts receivable account, none of this is needed. But if you do want it to go to a different sales account, you'll use the orange. And if you do want to impact and decrease the expense side so that you can post it into cost of goods sold, you'll need to use these purple cost ZF-35s. The product code, this is, I'm again kind of repeating myself from the AP side in case any of you are only doing one or the other, but you want to have that IPCM that will be set up by product code and GL class. Make sure it's unique and make sure you're setting it up in IPPM as well. So same criteria. That's what's going to drive when I add this intangible item to my sales order, where it's going to post to when I invoice the customer. Using the line item, then this is creating the new item. You're going to use, again, you can use that same item that you're using on the AP side. If you want, you can set up unique items if you want. Critical part is the product code that's driving the GL class and the attribute of intangible, so that it's not something that's sitting on your shelf. Add it into IDM as well. Leave the price cost at 0 because, again, these fluctuate. They are not hard coded unless you set them to be hard coded and you want to make the quantity define how much you're charging. And in that case, you could set the list or the price or the cost to $1, and then the quantity that you associate with it would multiply. But again, it's easy to just do a quantity one and change the price and cost on that line. Intangibles do not carry an average cost, and you can override them. In OQE, you can add the item to the sales order during OQE. You can also add it during OM. You will note that intangibles do not need to ship, so they don't go through excuse me, intangibles do need to ship, so they will go through OS. So unlike where we didn't have to receive the items through QPOR, intangibles on the sales side, you do have to ship so that the system knows which packing slip they are shipping with and should be associated with. Utilize required date types to group the surcharge lines with specific items in the order if you want, or manually force them to be wherever you need them. Determine if more than one line is necessary and how to split the shipments, what will happen if that needs to be handled. Again, you can add cost if you want there to be a cost on that line, just like you're adding prices. So again, this is circling back to that question, do I want to affect margin? Do I want to decrease the expense and increase cost of goods sold based on what my expense was on the AP side? Or am I leaving it blank and just processing to sales and AR for this line? The normal posting, so looking at this, the normal posting for the price that you put on a tariff surcharge line, so this is on the customer invoice, is I'm going to debit accounts receivable and credit sales, whatever I'm charging the customer. I am also going to, if I put cost on the line, I will be debiting cost of goods sold and crediting the tariff surcharge expense. Now, I do have some customers that put all of these into the tariff surcharge expense, so that cost of goods is not impacted. So again, it's going to be up to personal preference. This is just a normal or a standard way that it has been set up. But again, that credit that I'm doing to the tariff surcharge is offsetting the debit that I did when I processed the vendor invoice. So I'm alleviating that expense by moving it to cost of goods sold and associating it with the margin of the sales order that it's shipping on. So again, that's an option, one of the options that you have. When in OM, I can add the item at the time of OM if I didn't add it in OQE. The line will not auto release. And so in OS, you can process individual lines to add it. So if you want to, you can say, grab the line. It'll tell you it's not on the release. Do you want to add it? And you can add it manually to the through the OS process and say yes to ship then more than what was released. Okay, we're down to some of the additional considerations that you want to make, and we're cruising right into the end of the session. So these additional considerations, the commission posting, now this is strictly in regards to that ISGM or any restock R type attribute surcharge items. There is a ZIFM out there that controls all restocking items, and option B, if you select it, so it's posting restocking charges. If you set your system for option B, that sets it so that your restocking charges do not go to the commission file, and so it will not hit that commission file if you set this to be a B. Again, that's just the ISGM auto applied charges that it's talking about, that and any other restocking charge that you use in your system. So it's overall restocking charges, whether or not they should post into the commission files. The writing off of a surcharge, so you may charge them and then potentially the customers will fight back on, and if you need to, or if there was a surcharge that was applied incorrectly, this is a quick way. In ZF50, you can set up a code. Mine I did as SG. I didn't want to make it a T because T is really my sales tax one, so I didn't want to do a TF. I did SG just to keep it very separate. I added the ZF50 code, and then I linked it to the surcharge and tariff expense account through ZF35. So in option C, for both my ramp, which is AR, and my RMKE KE, which is C/R, I did the codes A/R interface code and trans type SG and post that to tariff surcharge expense. And I did the C/R SG trans type 1 so that both places, if I use the SG allowance code or discount or allowance code, it will auto basically it increases the tariff and surcharge expense based on the fact that I'm writing off that invoiced amount that I had sent to my customer. If I need to exempt sales tax on surcharge lines, and again, every state is different. I don't know that all of the states have information yet on what needs to be done with the surcharges or the tariffs. But if needed, in tax RM, you just need to confirm that each authority is defined with an exempt rate code. So that's option 1. My authority here is my Ohio state sales tax. I have an exemption already out there. And then I can set up in tax RM A through Q. I can set up any of these based on the product code, this unique product code that I've given all of these items that are associated with surcharge and tariff, or I can even just do it on the individual item numbers if I don't need a whole product code to be exempt. So the A through Q allows you, maybe I would select O for tax authority and item number, or L I might do to exempt the whole ZZTF product code. And again, these will auto tax exempt anyone that has this item and they're taxable under the authority that you select. Just a couple more things here. You can apply cost surcharge to your bill of material components. So that ISGM is based so this ZIFM, apply cost surcharge to bill of material components. This is for your ISGM records, the ones that you are auto applying. If and only if you have your ISGM set up by standard replacement cost, which for a bill of material component, it doesn't have a price, but it does carry a standard replacement cost. So you can have the system calculate the surcharge amount based on that standard replacement cost, and you can put your percentage against that standard replacement cost. So in this case, if you need to accumulate based on the costs of the bill of material components and not your parent item, you can flip this switch to be on. A couple more ZIFMs that we have, the apply maximum surcharge. So if ISGM is calculating your auto-populated charges, this ZIFM would guarantee that surcharges will only auto-calculate to a maximum charge per sales order. So in this case, I have entered in my ZIFM for apply maximum surcharge that the maximum surcharge I want any of my orders to get across shipments. So it's not just first shipment, second shipment, it's across shipments. I've given it a $500 max. And so this ZIFM controls so that nothing ever gets charged more than 500 on an auto-placed ISGM calculated charge. You can add more in a manual line, but automatically, if you have this ZIFM turned on, it will set a top charge. And then just a few more here, the no surcharge on orders over a certain dollar amount. This ISGM will set a maximum order value. That ISGM, again, it's ISGM, and it is looking at back orders and shipped values, so it's not just the shipment itself. You can enter an order limit to avoid surcharges over a certain dollar amount for the order. So in this case, if my customer orders $25,000 worth of material from me, I do not want to charge them any surcharges. And that's, again, the ZIFM is a turn on or turn off. You can have it on or you can leave it off. So these are just some recaps. Again, we hit our hour mark, so I don't want to go too much over here. If you're trying to watch this session in between other sessions. Anyways, this is a recap of on the AP side, the things that we talked about, the options that you have, using the sales tax field, adding a line item. You've got your price increase option, the QLAN to get that added cost into the average cost. And then on the sales order side, using that auto-generated line through ISGM makes it really simple. Manually entering lines through OQE and OM give you a little bit more control. The added considerations, we talked about commissions, what GLs we're going to go to, writing things off, exempting things in sales tab, but really we meant exempting your sales tax, and then ZIFMs or special surcharges, those tariff criteria things that we had set up. So that is it. What I would say, and if you're in the live session, we're going to talk about some of your items, some of the hiccups you've run into, or some of the possible suggestions that you have for us. But for those of you watching virtually, this is it. So I thank you very much for your attention today. If you do have any questions, please don't hesitate to reach out to us. Also, there are on Eventify, there is a PDF of the PowerPoint slides for you to access, and also just a brief kind of hit list of the options that we talked about today. So again, thank you for your attention and have a wonderful day.